Two paths to the same destination. One takes years of steady climbing. The other demands split-second decisions at breakneck speed. Both have made millionaires. Both have destroyed fortunes. The question isn't which is better, it's which one are you built for. Long-term investing is becoming a silent partner in human progress. You own pieces of businesses that solve problems, invent technologies, serve billions. Your returns come from economic growth, innovation, time. Trading is capturing price inefficiencies before others notice. You profit from volatility, patterns, human emotion, buying fear, selling greed, regardless of the underlying business. Investing. Research initially, then mostly passive. Quarterly portfolio reviews. Reading annual reports. The strategy runs itself. Trading. Pre-market analysis. Active monitoring during sessions. Post-market review. Continuous education. It's a full-time job or it fails. Investing. Accessible from $1. Fractional shares. No minimums. Dollar cost averaging works with any amount. Trading. Realistically requires $25,000 plus to avoid pattern day trader rules. Professional traders use $100,000 plus to survive drawdowns. Undercapitalized trading is mathematically doomed. Investing. Historically 8 to 12% annual returns. Predictable. Compounded over decades creates wealth. $10,000 becomes $100,000 in 20 years at 12%. Trading. Wildly variable. Successful pros target 20 to 50% monthly. Yes, monthly. But 90% of traders lose money. The upside is higher. The probability of achieving it is lower. Investing. Market risk. Inflation risk. Company-specific risk. Diversification reduces danger. Worst case. Wait longer for recovery. Trading. Leverage risk. Slippage. Gap risk. Overtrading. Psychological self-destruction. You can lose everything in one bad session. No recovery time. Investing requires business analysis, macroeconomic understanding, emotional discipline, doing nothing, patience measured in years, conviction during crashes. Trading requires technical analysis mastery, risk management precision, split-second decision-making, emotional control under pressure, constant adaptation to changing markets. Investing costs. ETF expense ratios. 0.03 to 0.2%. Minimal trading commissions. Long-term capital gains. 0 to 20%. Time cost. Low. Trading costs. Commissions per trade. Spread costs. Hidden. Short-term capital gains. Up to 37%. Data subscriptions. Hardware or software. Time cost. Extreme. Successful investors. Busy professionals. Family-focused individuals. Those who trust systems over intuition. People comfortable with slow wealth. Long-term thinkers. Successful traders. Full-time, dedicated individuals. Those with high risk tolerance. People who enjoy rapid feedback. Competitive personalities. Those treating it as serious business, not hobby. Many professionals use both. 80 to 90% long-term investments as wealth foundation. 10 to 20% active trading for learning, entertainment, or asymmetric bets. Warning. This requires iron discipline to prevent trading from infecting your investing decisions. Ask yourself honestly, can I dedicate 4+ hours daily? Do I have $25,000 plus I can afford to lose? Am I emotionally stable under pressure? Do I enjoy continuous learning and adaptation? Can I handle 50% drawdowns without panic? 3 or more yes answers. Research trading seriously. 3 or more no answers. Index investing is your path. There's no universal right answer, only the right answer for you. Subscribe for both investing fundamentals and trading psychology breakdowns. Comment climber if you're building wealth gradually, driver if you're pursuing active trading mastery. See you in the next one.